CashCalc can record any interest or dividend payments a client is due to receive to ensure the correct tax rates are applied and the cash flow remains accurate. So within CashCalc, if you select a client, Keith and Barbara Baker, select cash flow, inputs and timeline, savings and investments. When you add a savings and investment pot, give it a name, in this case cash. The category is the important one because if you ever select cash, GIA or unwrapped investment, it will give you the added option of selecting how much of the growth is income, either dividend and or interest. So we'll start off with cash. Who's the owner of that cash pot? Can be Keith, can be Barbara, can be jointly held. We'll come back to jointly held in a minute, but let's just start off with Keith Baker. 100,000 that pot is worth. Total return, let's just assume that pot's going to grow at 3% a year. And underneath that, of that 3%, how much of that is going to be income? Well, it's cash, so pretty much all of it. You'll notice the dividend section is grayed out because you've selected cash. Cash doesn't pay a dividend. And we can say of the 3% total return, all of it is interest payment. And then we can then opt to reinvest that back into the cash account. We can opt to have that paid out to the current account and then save that. You'll notice if you select something a little different, like a GIA, it's almost exactly the same option as before. But as you scroll down, you'll notice the income tab. Now you get the option of putting in dividends. So maybe with this particular pot, it's an investment pot, so we expect it to grow a little more, 5%. You can have both. You can have an interest payment and or dividend. In this case, we're just going to have one. And the dividend payment, we're going to assume out of that 5%, 3% is going to be a dividend payment every year. And again, whether you want it reinvested back into the GIA or paid into the current account. Again, once saved, all of the pots will be listed in the background. So there we've got an investment account, Keith, GIA. You've got the 5% growth and the 3% yearly dividends being paid, and then the cash savings account, again, the 3% interest being paid every year. The system will automatically set up the contributions for you. So when you click on the contributions tab on the left-hand side, you'll see these down here. So again, you've got the 3% coming from the investment account being contributed back into the investment account because that's what we've directed it to do, whereas the 3% cash savings account is being directed back into the current account, again, as directed by us. Cash flow model will clearly change. So if you click on the money in, money out, you've got the slim slither of interest and dividend payments coming in every single year for Keith. And again, you can turn those on and off as such. The taxes as well, all the income taxes that Keith is paying off the back of that interest and dividend are going to be recorded under his income taxes here year on year that he receives those. And if you click on the yearly breakdown for a more granular display of the taxes and the allowances being taken, there's the year on year. If we go to the most recent money in, there's all the different pots and the money going into them. We've got the investment account, dividends owned by Keith, gross amount, the net amount, and the tax he's paying is just over £1,000, and that's the calculation for the £1,000 underneath. Whilst the cash savings account, the interest being received by Keith, again, gross amount, net amount, and the tax he's paying is £1,000 on that interest payment. If you click on the liquid assets, that shows the contributions and withdrawals going in and out of the different pots as well. Now, how does this change if it's jointly held? Obviously, the tax position would change, and so does the UI to a certain extent. So if you click on the inputs and timeline, if you go back to the savings and investment pots, we're just going to force one of these pots to be jointly held. So if I just edit this one, the cash savings account, we're going to change that from owner Keith to joint. You can then specify at what percentage. So we're just going to do 50-50. Click on update. That will update it for me. Everything changes dynamically on the fly. So let's just go back to yearly breakdown, exactly where we were a second ago, but you'll notice now it's jointly held. The interest paid out is split 50-50, 50 to Keith, 50 to Barbara. So you'll notice the tax position has changed quite significantly. They're going to pay a lot less tax now because they're both making the most of their annual allowances, but equally Barbara pays less tax as well. So 500 in total. And again, everything changes within liquid assets. So hope you found that useful. That's how CashCalc now considers interest and dividends payments within the cash flow and the yearly breakdown. Any further questions, feel free to reach out to the help desk.